And I noticed also that JP Morgan are now forecasting a price at the end of this year of over $6,000, which tells me that they've got an even to long book. So, I think that's the way of it. I think that they're probably more frightened of getting short in silver than they are gold. I mean, there is a bit of a flow in gold, and you can keep your position level. Perhaps when gold ran above $5,000 up to $5,500, there may have been some who found that they were net short. You're looking at positions across COMEX and London, and you've got two things now working for higher prices. The first is industrial demand. Bear in mind that India's industrial demand is increasing very, very rapidly. The second thing is that you have in Asia, if you like, a greater affinity with silver as metallic money than we do in the West. In the West, we see it as small change, silver coins, which are always fairly insignificant in terms of their value. But in Asia, it's a completely different story. China was on silver standard until 1935. And in the Middle East, I mean, when I first went to the Middle East, which was in the 1970s, Maria Theresa dollars were still circulating and being used as money, certainly in the Bedouin tribes, and also, a bit more widely. So, they know that silver is money. We slightly dismiss it, and consequently, you've still got queues around the block for silver bars, silver coin, whatever. Throughout Asia. Now, we're talking about a very large proportion of the global population, if you like, going for it. So silver, if you look at the price in China, in Shanghai, I mean, I closed last night at something like 111, while here we were around about 80 or a bit less than 80. So you can see that there's a significant premium there. Our paper price hasn't caught up with the physical price. And I think that's the key thing to understand. So I think it's being drained out of Western markets. It will go back into China so long as there is the arbitrage. I mean, there are costs involved in arbitrage, obviously. But I can't see how the Chinese banks with branches in London will just sit on their hands and say, well, there's no silver in London. We won't bother. I mean, no, there is an arbitrage opportunity. And I think they'll probably take it on Globex anyway, the international version of the COMEX.
JP Morgan's $6,000 gold forecast means they are long on gold and scared of silver. Shanghai pays $111 compared to the paper price of $80, proving a real shortage. Asia sees silver as money, with growing demand for physical bars. China may return to a silver standard at a 15:1 ratio. Around $44 trillion could flee U.S. assets, forcing silver to soar, while Bitcoin could go to zero.
Yeah, I mean, we've had a pretty good rally today. I mean, as we talk, I can just get my chart up. I mean, we're looking, silver is up 12%.
Yeah.
That's the time when they can just push the price anywhere they want. There's no speculative or very little speculative interest. I mean, this is an amazing thing. If you look at the commitment of traders figures, which separates out the managed money, in other words, hedge funds, and speculators in the other reported category. I mean, they weren't long. They really weren't long. And indeed, hedge funds have been selling gold down, certainly from around about the middle of December. It was only really in the last sort of week or so of, into mid-late January that they were actually increasing their position. So there were a few people to shake out, but not all that many. Without any speculators in there, you're not going to get the sort of volumes, if you like, which, where you got people saying, okay, it's fallen so far, time to buy some sort of thing. They're just not interested. I think they're all scared stiff of what's going on or not understanding it. I mean, you would think that you would get momentum chasers in there, but they're hardly there. It's an extraordinary situation. The amount of speculative activity to shake out here has been virtually none, which really means, ironically, that the swaps, the market makers, I mean, they could just mark things down as much as they want without really being challenged. But she could do that. I think once silver rises to the point where you're looking at a gold-silver ratio of less than 20 and probably in the order of about 15 or 12, then I think she could do it. So, yeah, I mean...
Do you see that happening? The silver ratio of 15 to 1?
It's quite possible because, as I said earlier, I mean, the last metallic standard that China had was actually a silver standard. And I think it's in the psyche of the Chinese that is real money. And I think also in India, it's the same situation there. The silver is accepted as real money. And I think India could also do the same thing if she was minded to do so. And again, India has got the exchange controls, so she could do that. And what that means, and this is an interesting point, is that we could see something like 2.5 trillion of the world's population, which is what, 30-odd%, 35% of the world's population, on a silver standard. Now, that's something to consider. I don't think we need to try and examine this, to overthink it, to examine it too deeply. Just look at the premium in Shanghai compared with prices in the West. I think that's all you need to look at. And as long as the premiums are there, you can bet your bottom dollar that it's going to drag us up. And that's actually what's happening today. I think the other thing to bear in mind is that if you look at the value of base metals measured in gold, because gold ran up quite strongly,